So they can open the account and then open a demo account. So let's say you want to look at 5 assets and you are looking for 1 or 2 that you will trade for that day. So let's say we are starting with one metal, which is gold. The first thing is you go to www.tradingview.com, www.tradingview.com, where you have the platform to do your analysis. That's the first step. You go to tradingview.com. This also can be done on the phone, but it's better on a bigger screen. So you can actually see the markets in a much more clearer way. So when you get to TradingView, you go to your anchor time frame. You can decide to check from 4 hours, 1 hour, 30 minutes. So now we are looking at gold. When you open your chart, this is the way you should see it. You should be seeing what happened to your left-hand side, and then look at what happened to your right-hand side. All right? Look at what happened to the left-hand side, what happened to your right-hand side. You can see a bullish ride, and then suddenly we saw a bearish movement that collapsed gold aggressively, and gold has been struggling to bounce. So the first thing we want to do is we want to mark some key zones, because you can't trade everything. So you want to know areas where you focus on for that day, so you can pick your trade. So you pick this rectangle tool. The rectangle tool is somewhere here. You can see it. All the tools you will need, they are all here. All right? So you go to rectangle tool, you pick it. This rectangle. You can actually make it your favorite tool by clicking this star. So once you click this star, it will have a shortcut. It will come as a shortcut here. So you can easily pick it. I'm coming. Okay. So the commonly used tool, you can just put them as favorite. Where is it saying session? Not good. I'm looking. Still on anchor time frame, but you move a bit lower until you get to a point where you are not sure of a trade. Then you move to another asset. So now we go to 1 hour time frame. Let's see if we can have something on a 1 hour time frame. We can delete this one, reset it so you can see from left to right. So from left to right, you can see what is happening. You can see that all the candlesticks here, they are all small candlestick, and it is not having a clear direction. You can see them. They are all boxed. You can't say this is a bullish trend. In fact, those candlesticks right now, if you look at them on a much more lower time frame, you will see that they are having more wicks. More wicks. You know what wick is? The shadow, that thin line. So you have to be very careful in trading gold this period. Very, very careful. Until you are very experienced, before you now begin to trade within the range. But right now, as a beginner, there will be better assets to trade. So maybe let's check 30 minutes. If there's nothing there, we leave gold. So now you go to 30 minutes. It's still an anchor time frame. Now on 30 minutes, you can now see that the sideways movement is even more obvious. So if I want to trade gold today now, my idea will be price to come lower. Price comes lower, then I buy back. Price breaks this region, then I look for sell. But I'm not going to look for, I look for buy, sorry. Price breaks this region, then I'll look for buy. Price comes lower, I look for buy. Why will I not sell? My own personal bias is that price has been riding up and it's looking forward to break this place. The overall trend is bullish if you go to a more bigger time frame. So right now, there is no setup on gold. No setup. So don't force trade. So there's no point saying you are going to anchor microstructure. There's no structure right now. Except for price to come back to this area, I buy back. Price comes back again, I buy back. I won't like to sell. So that's on gold. The next thing you do, you now look for other assets you want to trade. Let's say, let's look at Euro USD. Anchor time frame. The same approach. You apply the same approach. You go to your anchor time frame. Okay? What has been going on? If you look at Euro USD, you can see a ride from here to here, and then a swing low, and then it's getting here, and right now price is here. Who can tell me what Euro USD is doing right now? On our 4 hours time frame. Who can say what Euro USD is doing? So what's the general trend? Going for a downtrend. How is it going for a downtrend? Come and explain. Okay. Is it bullish or bearish or ranging? Okay, now the question is it a tradable range? If you say it's ranging, is it a tradable range? Looking at it from 4 hours, from the eye of 4 hours, is it tradable? Is it tradable or not? It's tradable. Why do you say it's tradable? Okay. So where are we buying from? Where are we selling from? No, you're making sense, but I want to be sure that you know what you are saying. No, see, be confident in. So why are you placing a buy here when it gets here? Why is it here? Why is it here? Why are you picking this place? Which place? Okay. Thank you. Yes, he has actually made a lot of sense. So now you mark your key zones. And there are very obvious key level area here. This is one here, which he was mentioning. All right. Meaning that if price pulls back here, we buy back here. If price come back to this zone, it's a buy area. Why are we buying in this area? Why are we buying in this area? Oh yeah, somebody should say, if you are confident, why are we buying? Why should we be looking for buy in this area? It's a key zone. Why is it a key zone? Yes. Simple. It's very simple. It's an area where price got to previously and rejected. Look at it here. Price bounced there, came back to retest it, and then went up. So if, because it's not certain, if, that's why we are marking it as a key area. If price pulls back here, we can consider buying again. And why are we stopping here for TP1 or take profits? Because this also area, there's a rejection, it's a rejection area. That area also is a rejection area. So on 4 hours, we have looked at areas where we can consider trading Euro USD for today. So 1 hour. I hope no one is getting confused. Yes, Emmanuel. It is. It is. It is. It is. That's why we move to 1 hour. You know, 1 hour now is breaking it down. Do you understand? That area is also a key zone. With other confirmation. Yes, with other confirmation. With other confirmation. However, if it breaks that place, then it's going for this place. If it breaks this level, then we should be considering coming around here. Here or here. Here or here. So first opportunity should be somewhere here. Second opportunity should be somewhere here. I hope nobody's getting confused though. So Euro USD, is there a trade there right now? Is there a trade on Euro USD right now? Like right now? Right now? Okay. What is the trade right now? Buy or sell? So we enter buy right here. You didn't even say we need to first go to microstructure. There's no trade right now here. Okay. This is where price is right now. That's where it is now. This is our 5 minutes. Okay, look at what it's doing right now. It's doing a swing high and low right now. So our trade is that we are looking forward for price to return here. Because right now you can't enter this trade. We are looking for price to return back and then you buy back. So this area is our buy zone. There is no trade anywhere here now, except you feel like you can try sell here. And if you are going to try sell here, then you now be looking for a change of character. That means this higher high, higher low is doing, it has to invalidate it. And then you sell back here. So as it's going up and pulling back, going up and pulling back, let's say somewhere here, it breaks this low. Then it pulls back to form lower high. Then you can decide to sell back here. And then you buy back here. So at the moment, we don't have a trade. Let's look for another asset. I want to see if we can see something we can trade. Okay, GBP USD. Okay. Now, let me tell you something. If you are not sure of having a trading setup, don't force a trade. Don't say because I have opened a laptop, I am doing analysis, I must trade. If it is not giving you what you want, just stay aside. If it is not giving you what you want, step aside. So GBP USD is doing something similar to that of Euro USD. Most of the time they do similar things because they are like brother and sister. So we mark our key zones. my trading is within these two zones today, this area. So let's move to microstructure. Okay, no, now at microstructure, we see a trend coming lower. Lower, low, lower, high, lower, low. Then it keeps coming lower. Do you think we can find a buy here? Or it will break that place? Nobody's saying anything. Do we think we can find a buy there, or it will break lower? Who can give me, if we want to trade GBP USD now, who can give me the setup for it? If we want to consider a buy or a sell, who can give us a setup for it? Yes. If you give me a very good setup, like you explain it like a trader, you are going home with 5,000.
So if you want to get
a trade, whether buy or sell. If it is for a buy, explain the setup for a buy, and then the setup for a sell.
Okay, if it's for a buy, this one, it must break higher than this lower high. If you want to get a buy, so you wait for it to break higher than this lower high. So when it comes and it comes down and didn't break this.
Is there a lower high there? Is that a lower high?
No, that's an
you can just call it, just say the previous high.
Yeah, the previous high. So wait for it to break this previous high. Then it come down and it should.
Okay, wait, let me help you mark it. It break where?
This previous high.
This high here.
Yes.
Should I put it here?
Yes. This high.
Oh yeah.
So wait for the movement to change like this.
Okay, wait. This. It breaks like this from where it is now. It breaks.
It shouldn't come below this previous low.
So at what point?
So it should come here.
It should come back here.
Yes. It should come down a little.
Okay.
But it shouldn't be below this one.
Like this.
Yeah. Then we can place a buy from here.
Place a buy from here.
Yes. Can place the buy, but if you want to get a low,
then where are we going to? If we place the buy, where are we going to?
It should be higher than this.
Look at your screen now.
It should be higher than this. Okay, it can be higher. Yes. So if you place the buy from here, it should break out of this previous high. That's where we can.
Okay, so I should drop it there.
Yes.
Okay.
And
oh, sorry. Let me come again. You say price should break here, then come back here.
Yeah, then we place a buy.
Then place a buy here. So anywhere here.
Yes.
Anywhere here.
Probability can go ahead.
Okay. Oh yeah. Is that all?
That's for the buy.
Okay. For the sell.
For the sell. Should I start from this?
You're analyzing the trade now.
Okay, for the sell, let me continue from where I stopped.
Okay.
For the sell, if it comes back.
For the sell, if it comes back from where?
From here, like if the market comes back or it ranges.
Come back to where? Touch this.
Like okay, if it comes back, say and without.
Come back where?
Like it went lower.
Lower.
Like it breaks the previous higher.
Which one? At where?
It should come down.
Okay.
Okay, we have a point here. Okay, if it breaks this,
Okay, break here.
yeah.
Uh-huh.
So wait for it to come back.
Come back to where?
Come back up without breaking this previous high.
Okay.
So we can place the sell from here.
Okay. To where?
Coming down, it should break this previous low.
Uh-huh.
So that's how we can.
A trader. Thank you, guys. Did it make sense? Or you tried? No, not you, Emmanuel. I know. What one thing David is getting right is the proper structure of how you should place a trade. That means you are not buying, you are buying cheap, you are buying low, you are selling high. He's getting that concept, but he's not getting the location correctly. He's not getting the location correctly. So trading is not guesswork. You are either right or you are wrong. It's not guesswork. Who want to try? Oh yeah, Dominion, come on. I should put your microstructure in 15 minutes. Okay. But no 5K, it has been cancelled though. Take. No, don't worry, let me know.
My God.
Oh yeah. Okay, that's where the price is. No, use the piece. Yeah.
Now, point the price.
Clip it. All right.
Currently, price is here.
Okay.
And you said if we are thinking of a buyer.
No, I'm not saying if you are thinking. Do analysis. Either for the two.
If I want to be a buyer,
Okay.
like on the buying side or on the selling side. Now, let me start with the selling side.
Move to
first.
this.
Let me start with the selling side. This place is a key zone and price currently swept this high. If I'm thinking of selling,
Some people don't understand swept here.
price took out liquidity.
Some people don't understand liquidity here. Use simple language.
Price broke. Price broke this high.
Okay.
This high and it's rejecting.
Okay.
As price is rejecting, if I'm thinking of selling, since this high has been taken out, I will wait for price breaking this key zone and closing below this key zone to take my entry for a sell.
Okay.
But
you take your entry when if price break in a nutshell, if price break this zone
and closes below it.
Okay.
I will now look for a sell.
Okay. Now you are saying if price comes down here and break this area and 15 minutes candle stick, right?
Yes.
Close below this zone.
Yes.
Okay. You look for a sell.
That is for a sell. But if I'm thinking of a buy, like trade down. A buying trade since this high has been taken out, I will either wait for price to get to this current price. And either wait for price to get to this area gone and see how price reacts, so that I will buy from this place to this place or here.
Okay.
But I'm not 100% of buy, but I'm not sure on the buying side, but I'm 100% sure.
100%?
Not 100%, but I'm sure. Sorry. Sorry. I'm not sure. Price it's not 100% clarity that price will do as I'm expecting it to do, but there is a probability that price can do what I'm anticipating.
All right. Now, when you are doing analysis, never forget structure. Never forget structure. Never forget structure. Never forget structure. If you look at this GBP USD clearly, you will see that price was doing lower low, lower high. Lower low. Then all of a sudden, it's not completing the new low. Are you following now? This low here, this low that is coming here, should have taken out this low. Do you understand? Lower low, lower high. Lower low, lower high. But look at what is happening. This low here. This lower high here. The new, what we should see next is a lower low that is lower than the previous low, which is this level. But now, what it's doing right now is that it came to form equal low, and then now is going up. So what are we expecting to happen? Two things. It gets back to this previous higher low. Break it or reject from there and break lower. If you reject from here and break lower, that's a new low that has been formed. So you only wait for a pullback to retest this area and you sell from here. So Dominion was correct with the first one. Okay, now price has come back here. If price does not break this low, this lower high here, then we should expect price to break here, reject back, and then we are selling from here. See our entry here. Our entry is somewhere here. Then we sell lower. Now, if price breaks this lower high, that means it's already forming a bullish bias, short-term bull, back to this area. So you will see that somewhere here is doing something like this. Can you see? If price break out of this region, if you can enter aggressively after the breakout for a buy, enter your buy here, put your stop loss here. Or you wait for price to come back to retest that key area. Then from the key area, you enter your buy, you place your stop loss below here. Take profit 1, take profit 2. Did it make any meaning at all? That's structured trading. A break of a break or invalidation of a structure change market direction. Sir? Okay, I should put it back on 5 minutes. This is 5 minutes, sir. What do you want to see? Yes, sir. This is 5 minutes. On 5 minutes now, can't you see that it's already forming higher high, higher low? A high and a low, equal low is going higher. So it breaks this region, it forms a new higher high. Then you wait for higher low. Back to this zone. Then you trigger your buy. You take it here, level 1. Maybe after a long time, I might trade GBP USD today, because it's very close to what we want. So I wait for price to break fully here, come to retest it, I take it down here. So my entry is just around this area. That's my entry. My stop loss is here, below this. And the reason why I'm putting my stop loss there is because that is the recent low. I don't use candlestick for stop loss anymore, because candlestick fails a lot. If price comes back to take out this low, that is when I know that structure, the bearish structure has not changed. Is it getting clear? Is it getting clear? So that's how you trade structure. The only thing you now need to do now is to add any of your indicators to it for more confirmation. Let's say you are using RSI. Easy. Now let's say we are using RSI. RSI is saying it's already entering overbought. On our microstructure. So what that means is, if I want to trade much more safer, once it does the complete breakout and a ride higher, I will wait for a pullback for it to give me oversold. And then without nullifying this low, then I find my buy still around this location. So I want price to really go. Price goes up because it's at overbought. I allow it to pull back to this area. The reset, that location, this key zone. Then by that time, while it's selling back, RSI is already coming below 50. RSI is coming below 50. Then I ensure that price doesn't cross below this low. Then I find my buy. Stop loss here, entry somewhere here. I take it back to TP1, then I target TP2 up there. So we are going to, every one of us, we are going to trade GBP USD today on that our demo account. So what we are waiting for now, two things. A clear breakout, which is already happening. We should have attacked it right now and say, let's buy aggressively into it because of the breakout. But let's allow it to swing up, pull back, and then find our entry at the higher low. And if I'm not using RSI, let's say I'm using simple moving average. So simple moving average is still telling me the same thing, because I don't buy far away. I don't trade far away from the moving averages. It's clearly breaking it right now. I'll allow it to go. It comes back to form a what? Higher low. It comes to rest on my simple moving average. Simple moving average serve as support. Then I buy. My stop loss is below this low. If you are confused, say I am confused. Okay, if you are confused, laugh. If you understand it, say I understand it. If you understand it, say I understand it. So I think those that understand it, take it. Yes. Yes. But sincerely, do we understand it? Sir? Okay. What I'm saying, stop loss is below this low here. Once I enter, my stop loss is below this low. This low here. This low, my stop loss is here. Yes, below the low. If it comes back to break that low, it means that sell we saw coming is still much more valid, or we enter too early. Now, what we are doing, this is just what we are doing. Lower low, lower high, lower low, lower high. Then the new low did equal low. It didn't break below. Now, the new high is breaking the previous high, which has invalidated this sell that was coming. And since the rule is don't buy at higher high, so we are saying we want the price to pull up, then come back to that area, that zone. Then I'm looking at moving average. My buy is when it comes back to test on that moving average around this location. I buy. My stop loss is below the equal low. Here. Does it make sense? That's what is on the board is what we are seeing here. Yes. Samson, do you understand it? Yes, sir. Sit down, sit down. Yeah. Dropping. Sell. If you don't put stop loss, it means that the market keep going down. Your money keep going down. But if you put stop loss, it will take away, and it hit your stop loss, it will take away that portion you have allocated for that particular trade. So this trade now, let's say we are allocating $200 for it. Once it start coming to your stop loss and it hits stop loss, $200 will be minus from your account. Do you understand? But if you don't put stop loss, it will keep going 250, 300, 400. And if it goes, it never returns. That's how people say, you hear people say they blew their account. Just like one of my friends yesterday, that gold blew her account. They said, please tell the cameraman to focus on somebody sending me a message. Please tell it to focus on you and make zoom you closely so that we can watch what you are touching. Do we understand it to this point? Even if you don't understand it, you just keep following. Don't give up yet. Except you have already made up your mind that, no, I'm not, this thing is not my thing. Yeah, that's when nothing can enter, actually. If you have already zeroed your mind that, no, this thing is not my thing, I'm not called for this, that's when it will enter. But if you put your heart to it, even if you don't understand it yet, it's just slowly. Everybody learn at different pace. So don't feel offended or don't feel like it's not entering. Everybody learn at different pace. Yours might be just once, another person might be twice, another person might be 3 times. Your own might be 10 times before you now begin to see the picture more clearly. In fact, some people, they will learn on the job. Some people don't even learn like this. It's when they start demonstrating it. That's when they learn. That's why the demo is important. Yes, sir. You can't put stop loss at entry, sir. Why are we putting stop loss here? Below here. Normally, when you enter a trade, it doesn't just start going your way immediately. So what you are doing is you are giving the trade the room to do whatever it wants to do before it starts going, before it chooses the direction. Why? Because there are participants in the market. There are participants in the market. Okay, so this was what happened. Then we are waiting for price to come here so we can buy here and put our stop loss here. Now, sir, watch. This area you are seeing, this gap between that entry and where your stop loss is, these guys here, they are placing bets on that area. Some are feeling order in that area. And these guys, I'm not talking about retail traders. I'm talking about institution traders. Institutions like banks, hedge funds, portfolio managers. This area you are seeing is the area where they are feeling orders. Now, what happened is when there's one more person, investor, who gives money to these guys, is giving them $7 million. Invest $7 million for me. Help me buy dollar against pounds. And then he tells them the price to buy it. They buy it for me at 1.36400. They buy it for me at 1.36400. Now, 1.36400. Here, 1.36200, for example. These guys also want to make profits. They are looking for the best price to enter. They must not enter above 1.36400. They will enter anything below. Are we following? They will enter anything below. They must not make mistake and buy at 1.3641. Because 7 million is not small money. It will affect the investor. So they are always waiting for price to come 1.36 390, 380. So the moment price drops a little from the 7 million, they put $70,000. Price move back again, they wait. Price drops again, they put another 100,000. Now, as they continue to fill the order, when the money is now much, when this area is overloaded with people who are buying, that's what we now make price kogbera. That's what we push price. But why they are doing that, there are more selling pressure than what they are doing. Maybe they have been able to fill 1 million into that space, but the buyers are not in control. Sellers are more in control. The money comes down. So they've lost some money from the investors' money. That's why they put stop loss too. So that's why you will see price. When you when you enter a trade, price will be dangling around your entry. It will go down a little, come up again. Go down a little again, come up again. When the order has been fully filled, and then there are more buyers in that area, then price begin to push higher. I didn't learn this from technical analysis. I learned in CDO market. CDO market is a liquidity provider. That's why I learned this thing. Only that we can't apply it as retailers. We just need to trade in the key zones. This concept I just explained now is not applicable to us as retail traders. But this is why we are seeing those reactions in the market, where you suddenly see price moving, shaking, moving between one point to another point. Order is going on. People are taking profits. People are placing new order. People are taking profits. So these guys too, they are also afraid, the same way a retail trader is afraid. Yes, because this guy will not hear story. Before this guy will give them money, they have to write CV to this guy, because these guys are looking for this guy's money. All those paper offices that they have, there's no water. Those offices, they pay him hundreds of thousands of dollars monthly, not yearly, monthly. And they have staff of over 1,000. They are paying these guys tens of thousands of dollars. And it is from these guys' money that they will make that profit to pay, to facilitate, to continue to make their business to run. And these guys too must make profits with his capital secured. But it's from his capital they are going to make their own profits. That's why they are not traders like us. They are position traders. Their orders, they take time to fill it. And that 7 million, they will not fill it at once. They'll be filling it slowly. 50, 100, 120, depending on the price, where market is quiet. The moment market is quiet, is stable, at that low price, they fill it again. Once price move by 1 point, they stop. When market is quiet again, they fill it. The moment market moves, they wait. Because this guy has said, buy at 1.36. So the amount they have been able to invest at that particular trade is what they were allowed to go. They keep the rest. So maybe out of 7 million, they have like 5 million that they have not touched. It's just in the bank, sitting down. They will look for another asset. Do we understand this? And the same thing should apply to you. That's why you don't go all in. You don't go all in. You have 500. Okay, first trade, I'm putting 50. Whatever this 50 does, let's return with it. So can you see now? It has completely broken this level. Then we want a retest back here. We'll place our buy here. Y is using 20 SMA as support. Yeah. So we try buy here. We place our stop loss here, and let's watch what happens. Then let me correct Dominion. There's nothing like 100% sure. Nothing like that. Even hedge fund, these guys, yeah, they don't use it. That's why they employ hundreds of analysts. And out of that 100, 80 must be saying the same thing. 80 or more than 80 must be saying the same thing using different instruments. They cannot afford to make mistake because of investors' money. Huge fund though. A man walked into our office one day with short knicker and Crocs. He's a Lebanese. I thought it's just because the way he entered our office, he entered very casually. I thought I didn't even greet him. I didn't attend to him. I just faced my own office. I was doing my own job. Until I saw my director rising up, rushing, calling the office assistant to give him tea. And what's happening here? This man is on short knicker now. This guy has a mountain in Lebanon. He has a mountain. He has a mountain. And that mountain, they are getting these minerals. All these minerals they use to make tires. This guy came to hedge $10 million. He came to hedge $10 million. Croc and short knicker. In Nigeria, here, you are better with like 10. He came to hedge, I think I told my wife, he came to hedge $10 million. Hedging means that they are about to start a project. All right? And they are not sure if by the end of that project, the price of that asset will fall or increase. They are not sure. So what they do is they come to a liquidity provider or broker. They will come and stake. They will come and short, open a short position. That's sell. They open sell. They will open a sell position. So while they are doing that project, if the price of that asset drops sharply, they will have recovered back their money from the shorts. The money they've invested. If the price increases, now the 10 million they brought will reduce a little. Now the project has gained more money. So while they finish executing the project, they start selling, they make more money. Now from the money they make, they will come and withdraw the money, the 10 million they stake, which has reduced by, let's say, 3 million. So from the profit they made, maybe profit of about 5 million, they use the 3 million to short back this one. So they now have a gain of 2 million. But if they don't hedge it, and the price of that asset they are mining, they are processing, falls, would you know? That's why you will hear they say some project failed. See, if you are really going to be in the financial space, like you want to control the financial mountain, your risk appetite needs to be high. I need to understand figure and understand money. Yeah, we are not talking about 10 million naira. We are not talking about 100 million naira. We are not talking about. I will imagine if 10,000 of Dangote truck collapse, it will have less supply, and there's a competitor waiting. So what we are saying here is beyond $500, $200 I want to feed my family. I want to build a house. I want to buy a car. No. Honestly, you need to begin to think beyond that. It's beyond that. Many times our thinking is liability. Get money to sponsor liability. Yeah, look fine, wear nice clothes, wear designers, ride fine car, build a house, and then go about, give my mother money, give my father money. Oh, no, that's not what we are talking about here. So going back to our chart, that is, you just trade structure. You trade structure. Here, don't be tempted. Say, let me enter here. No, allow price to discount. Let it come. If it doesn't come, no problem. It's good. Mistrade. Money saved is money earned. That's why I hate losing money. I hate losing. Money saved is money earned. Don't allow, just your key zones are very important. If price don't come to you in that place, because that is your territory. This is your territory. This is your territory. This is your territory. This is your territory. If price don't get to your territory, don't chase price. Let it come and meet you. It means that what you are thinking is correct. If it comes to you, it means what you are saying, your bias is right. So it comes around you. It didn't break below the 200, the 20 moving average. It stays there. It pauses. Place your buy, post your stop. Go and preach the gospel. Yes, that's how we should have been living our life as ID Christians. Spend more time doing the things of God. Place your trade. Close it. Don't even go and check it. Since there's a stop loss and there's a take profit, close it. Go into the street and go and be preaching. Come back after 3-4 hours and check. Once you are satisfied with the profit that is there, close part of it. And just like we read in our open heaven today, if you win soul and you ask God for anything, He will do it because you have done what touches His heart. So that means your trading will be going on well because he knows that even if you win soul and then you start making more money, you will use the money to do more of His work. Somebody was asking me that, is there a God factor in this thing? Yes and no. Yes and no. If you don't learn it and know it, if you speak in tongue on it, you keep losing money. And the tongue will keep making the losses to be bigger. So don't throw away the place of skill, learning it. If you learn the skill, you now know how to trade. When you pray, the prayer is not affecting the market. The prayer is affecting you. It makes you think correctly. It helps you to be disciplined. Do we understand? It helps you think correctly. It helps you to be disciplined. It helps you to be stable. It controls your greed. That's the God factor. The God factor affects you, not the market. And the Satan factor too affects you. The person using greed is devil. Yeah. The person who does not want you to be stable is devil. Devil can destabilize you and fill your mind with so many thoughts. Not evil thoughts, good thoughts, like you can buy Homer Jeep in the next 1 month. You use the side 300. It will work. So that's it. Any question before we go? We are done for today. So we want to buy pounds versus dollar, but we want price to come to our area back here. Yes. If it doesn't come, we leave it. If it goes, and never return, we will only go and look for a buy after a break of this level. Breaks it, retest it, then we pick it. If it doesn't come here, we won't take it. The only reason that might make us consider is if the 200 moving average goes there and then it's not breaking below it. Then you can say, okay, it seems the sellers are completely out of this game. Let's go in. Let's try. That's the only reason. If not, let's wait. Let it come. It comes here, we buy, we put our stop loss here. And the stop loss is even sweet where we want to put it. Now look at the stop loss is now going to be below the 50 moving average. So should in case price crosses the 20, you can still use 50 as support. So our stop loss will be below the 50. So let's close. I think we are done for today. Now our entry, so once price comes around 1.36, 1.36, let me see, 1.36, 400, 1.36, 1.36, 420, 1.36, 400, 1.36, 410. Those are our buying area. Then our stop loss. USD online. Okay. And the person was not in yesterday's class. Kindly watch yesterday's video. Towards the end, we talked about risk management. Risk management. And in risk management, you determine what you want to risk per trade. And I suggested that you should be risking between 1 to 2%. So 1% of 10,000 is $100. 2% is $200 per trade. And what that means is you need to watch yesterday's video. You will need to calculate the pips between your entry and your stop loss. You need to calculate the pips between your entry and your stop loss to determine the lot size you will need to use. Then that will now determine, because the $10,000 will just be in your balance. For every trade you initiate, there's a lot size you will need to allocate for that trade, which will now determine your profit and your loss. So if you are risking $200 from 10,000 per trade, and your stop loss is, let's say, 20 pips, that means you'll be using 0.50 for that trade. Am I correct? No, you will use lot size 1, sorry. If your stop loss is 20 pips, and then you are risking $200 from $10,000 for trade, you use standard lot size 1. So if the trade goes against you, you just take away 200 from your account, and then that trade is over. Then you will now look for a new setup. If the trade goes in your favor, it should be giving you more than 2%, 3%, 4%, because your reward against your risk should be higher. There's something we call risk-reward ratio. So your reward should be more than 2%. let's say 2.5. So let's say if you are risking $200, your reward that should be coming should be like 400, 500, 600. For example, our TP1, if we place our trade at that entry and we put our stop loss here, our TP1 is 1.449 somewhere here, then TP2 is 4%. So if you are risking $200 from 10,000, your reward should be around $800. Why your stop out should be around $200. You can increase more than that. That one now depends on your level of risk, your risk appetite. But it is advised that you do a very good conservative risk management. Watch yesterday's video and you will understand it properly. So are we on GBP USD? So go place a buy limit. Yeah, the gospel, please help me help them. Place a buy limit. You go to new order. Yes, see, market execution up here. Buy limit. Buy limit. All right. So place your buy limit. Go to market execution. New order. Oh, this trading view now. You can't trade from there. So you see market execution. You now click on buy limit. I'm not a good fan of is it trading view?
No.
MT5.
Yeah.
Tell gospel to help you. I'm not used to iPhone. I don't like iPhone. Okay, so okay. The price. 3 points. 3.42. Buy limit 3.42. Okay, so no, this is gold though. New new order. Market execution. Buy limit. So now price 3.4. We have put it at 3.41. 3.41. Buy limit. 1.3, yes, 1.3, 1.36. 1.3641. Buy limit. You click on it. Yes. Exactly. Now stop loss. 1.36. Our stop loss is 1.3623. 1.3623. Then the take profits 1.3667. Please. Okay, now do another one. Which lot size did you use? 0.01. Okay, do another one. The same place, but this time around the TP will be 1.37100. Place it. It's a pending order. It's not going to activate until price comes there. The moment price comes there, it will open by itself. Do we understand? They call it pending order. Pending. So price, when price comes there, is when it will open and start running and start reading. So do the second one. The same tree, the same stop loss, but take profit will be 1.37100. A buy limit. Same entry. Same stop loss. Entry is 1.36441. Stop loss 1.363 abi. No stop loss. 1.3623. 1.37100. So that means 37100. That means we have two trades. So place it. Aha. So just go about your daily business. That's how to do pending order when you are not seeing instant trade, instant execution. Do you understand that? It's a pending order, meaning that you can go and do something else, waiting for price to come there. If price doesn't come there, gaskia. Guys, money is not gone. Money is saved. No trade, no investment. What if it now comes back there? You can still respect it. Yes. Maybe the next day. You can now close it by yourself. If by that day, because we are saying this is our trading for today, our trading idea for today. So what we'll do is, after 3 hours or 4 hours, we come and check what has happened. It is either price truly comes there, pick our trade and start going, or price stop us out, or it didn't pick at all. It left us. Price left us. Then we will now come and look at for a breakout of this area, or we sell from here. So these are our key zones for today on GBP USD. This is the area we are considering to trade. This area. This area for today. Price may likely not go within this portion today. And do you know you can be trading like 5 times within this zone today, and three out of the 5 will work. Let's say price get here, you can decide, let me sell, nothing spoil. Then you sell back here. If price get here, you can say, let me buy. You buy from here, it returns here, let me sell again. If it fails, it stop you out, you buy to this place. Then price get here again, you sell from here. All those signal providers, that's what they do. They mark a portion that they want to trade within that day. So they give you both buy and sell randomly. Yes. No, we didn't do that. We didn't factor that in this trade. What we just did now is to first learn execution. So now what we have just done is place a pending order. We are expecting price to come here and then pick our trade and start going. TP1, then TP2 before the end of the day. So then maybe subsequently, we'll now start looking at, okay, this is the lot size we are going to use for this capital. Sir? There are 2 take profit, or there are 2 trades. The first take profit is 1.36. What's the first take profit, please? 1.367. Yes. You can put it at 1.367. Yeah, 1.367. Then second one, 1.371. Yeah, TP1 here, somewhere here. That's 1.36. 1.366. Who opened three position? No, it's two. TP1, TP2. 1.371. Second one here, 1.371. What? Second one, 1.371. First one, 1.3667. This go, yeah. So I'll be looking for a buy on gold now. Short buy, short, very short one. That's about 200 pips buy. Any other question, we'll continue to, we'll ask it tomorrow. All right, thank you. God bless you. Have a very wonderful day.